Yes, we attended. Page number 66, question 5, sub question 5. Machine account shows underlying balance of rupees 60,000 in the books of Mehta Limited on 1/4/2020. We did this yesterday also.
Yes.
Balance means book value. This machine was purchased 5 years back. Underline till today. Total depreciation written off on this machine was 20,000. Now here we don't have to do that way. Suppose cost equals to 100. We can do it that way also, but that's very lengthy. We can do it in more easier manner. Raise your hand from this sentence which I made you underline. Raise your hand, what would be the cost and what would be the annual depreciation? From the sentence which I made you underline. Only common sense is to be used, which is very uncommon. Only 3 people, 4 people in the class have that common sense. Very, very simple information. I want to see more people using your brains. Read the sentence I made you underline. You have to tell me 2 things. One is the annual depreciation, the other is the cost. Come in fast. Let's talk. Anyone else? Ruturaj?
80,000 would be the cost.
Very good, correct. And annual depreciation?
4,000.
How do you get that?
20,000 divided by 5.
Very good, sit down. In straight line method, the depreciation remains same. So if total depreciation of 5 years is 20,000, what would be the annual depreciation? 20,000 divided by 5, 4,000. And what would be the cost? Normally we minus the depreciation and get book value. How do you get book value? Cost minus depreciation. Bring minus depreciation on the left side, it becomes plus. What would be the cost? Book value plus depreciation. Book value 60,000 plus depreciation 20,000 means 5 years ago what would have been the cost? 80,000. Did you all understand this? Once again, in straight line method the depreciation every year remains same. So if total depreciation of 5 years is 20,000, what would be the annual depreciation? 4,000. How do you get that? 20,000 divided by 5, every year 4,000. It remains same. And by going reverse, how would you find the cost price? Book value 60,000 plus depreciation 20,000, 80,000. Raise your hand who did not understand this. Anyone who wants me to explain it again? All are clear with this? You can go with that method what we did in last 2 lectures, 100 also. But you've seen it's very lengthy. Okay, there also you'll get the same answer. On 1/1/14, second machine, underline that, was purchased for 12,000. This is also a question of 2 machines. As we did the workings yesterday, we'll be doing it, and today I'll be asking you every information. Okay? Second machine was not found suitable and sold at 10% loss of book value on 31/12/14. Yesterday first machine was sold in question number 4, and today in this question 5, second machine is being sold. Every year company provides depreciation at 5% under straight line method. Even if you do the workings what we did yesterday. Suppose cost price equals to 100. 100 is 5%. 5. 100 into 5% is 5. For 4 years, 5 into 4, 20 would be the total depreciation. 100 minus 20, 80. When book value is 20, cost is 100. When book value is 80, cost is 100. So 60,000, how much? Do it 60,000 into 100 divided by 80. Sorry, 5 years depreciation. So 5 into 5, 25. Sorry. Suppose cost is 100. 100's 5% is 5. So 5 years depreciation will be 5 into 5, 25. And book value will be 100 minus 5, 75. So when book value is 75, cost is 100. So 60,000, how much? Do 60,000 into 100 divided by 75. You will get 80,000, same 80,000, but so lengthy. And in this question, you can directly do 60,000 plus 20,000, 80,000. And then 80,000's 5% also comes to 4,000, which you can also do 20,000 divided by 5. Yearly depreciation would be 4,000. Did everyone understand it? So this is more easier. When the total depreciation of all the years is given, then follow this simple method. From the above information, now in this question what is asked is prepare machinery account and depreciation account in the books of company up to 31,350. So first we make that working note 1 of machine 1 and find the cost and depreciation. Okay. Be attended. On 1/4/12, the book value is 60,000. Able to get it? Plus total depreciation of 5 years is 20,000. Cost would be 80,000 and annual depreciation would be 20,000 is of 5 years. So 20,000 divided by 5, 4,000. Okay, very simple approach to get it, and you can compare it. When we assume cost as 100, it's very lengthy method to get it. But when do you have to do in that manner cost price 100? When this total depreciation is not given, then there is no other way to find it. Then you have to assume the cost as 100. Here no need to do that. Okay? And immediately below that, working note 2 now will make for 2 machines. Machine 1 and machine 2. Now we'll read the whole question, and every date you have to compare with year ending. Okay, every date is to be compared with year ending. Whichever occurs first will be recorded first. What do you do on year ending? Correct. Year ending we always provide depreciation. Okay. So we'll read the information and record it. Look at the things everyone once again. Machine account shows balance of 60,000 in the books of Mehta Limited on 1/4/12. So now will we start? 1/4/12. Book value of machine 1 60,000. As I discussed with you, it's not the cost price, it is the book value. Did you understand this, everyone? Then further, this machine was purchased 5 years back. Till today, total depreciation written off on the machine was rupees 20,000. So we obtained the annual depreciation with the help of that. Now, on 1/1/14, underline 1/1/14, the next date is 1/1/14. So, keep standing only. Be attended. When does 1/4/12 end? 31/3/13. Does 31st March 2013 comes first or 1/10/2014? 31st March 2013. 2013 will always come before 2014. So on 31st March 2013 will provide depreciation. What should I write nearly?
31/3/13 depreciation.
What amount?
4,000.
Yes, sit down. On 31/3/13 we will provide depreciation, which in working note 1 we have counted for machine 1 annual depreciation is 4,000. Did you all understand this? So 56,000 will be the book value on which date? 1/4/13. Any confusion with this? Fill in what next? Correct, very good, sit down. Be ready. When does this 1/4/13 year end? 31/3/14. And what is the date we underlined? 1/1/14. So will 31st March 2014 come first or 1st January 2014 come first? January will come before March. Here is C. So now in the chronological order we should record 1/1/14. Yes, fill in.
12,000.
In?
Machine.
Yes, in machine 2 column purchase of 12,000. Is everyone clear with this? Second machine was not suitable and was sold at 10% loss of book value on 31/12/14. Unlike 31/12/14. Yes, wrong. So wrong. Anyone else? Hit.
Please provide depreciation on 31/3/14.
Correct. Every date is to be compared with year. 1/4/13's year ends on which date? 31/3/14. Will 31st March 2014 come first or 31st December 2014 come first? March will come before December. So in the chronological order, now on 31st March 2014 again we have to provide depreciation. Be very careful with this point. It is very simple. If you do it cautiously, you never make a mistake. Every date compare with the year ending and see which should come first. Yes, Kate amounts?
4,000 in machine 1, 150 in machine 2.
Very good. So now, listen everyone. Machine 1, the depreciation will remain same. And it's also full year. This was also 1 year. And this is also 1 year. But machine 2 is purchased on which date? So 1/1/14 to 31/3/14 is how much period? 3 months. January, February, March. So on machine 2, we have to count depreciation for only 3 months. So how will you count 3 months amount on 12,000? 12,000 into what is the rate of depreciation? 5% into 3 divided by 12, 150. Did everyone understand this? Machine 1 will remain same. Earlier also we calculated depreciation for full year and now also full year. But machine 2 we have to count for only 3 months. So 12,000 into 5% into 3 by 12, that is 150. Did everyone understand this? Now the book values will be 52,000, 11,850 on 1/4/14. Is everyone able to understand this? Every date should be compared with the year ending, okay? Then, Prachi.
Now, first we got loss, 10% on second.
Correct. Be attentive now. What is the date we underline? 31/12/14. Now be careful. 1/4/14 will end on which date? 31/3/15. Will 31st March 2015 come first or 31st December 2014? 2014. 14 will come before 15. So now we will record 31st December 2014. But machine is sold. So before selling it, again, we are using the machine for how many months? 9 months. April, May, June, July, August, September, October, November, December. How many months? 9 months. Prachi, how will we count? Directly loss will not come. Okay, before selling it, first we have to provide depreciation. Okay, not same 150. 150 was 3 months and now it is to be 9 months. So we have to count. Straight line method means we have to count depreciation on cost price. So how will you count it? This amount. 12,000 is the cost price into 5% into 9 by 12. Don't count depreciation on machine 1 because on 31/12/14 what transaction is taking place? Sale of machine 2. So you count depreciation only on machine 2. Machine 1 is remaining unsold. So on that you will count depreciation at the end of the year only on 31st March. Is everyone clear with this? Only machine 2. And for how many months? April to December? 9 months. So 12,000 into 5% into 9 by 12. That is 450. So before selling, its book value will be 11,400. Understood this everyone? Dhwani next. 10830. Wrong. So simple to count the loss with
114000 into 10%, so 1140.
11400 into 10% losses 1140. What did you do?
10,000
Yes.
11400 minus 5%.
5% is depreciation. Read the sentence carefully. There is 10% loss and you don't have to do minus, you have to do into. Okay, both of you sit down. 11400 into 10%, the loss is 1140. And now you will press minus equals to. So 10260 is the selling price. And the story of machine 2 is over. Okay, now machine 2 will not come in the further workings. It is already sold off. Is everyone clear with this? Roshni, what next?
Depreciation on 31,350.
Yes, now lastly 1414 ends on which date? 31,315. So again machine 1 will count depreciation for 1 year. Yes, Roshni?
52,000 minus 4,000.
Yes, that depreciation will remain same. 4,000 full year's depreciation. So 48,000 will be its book value on 1415. And in machinery account, this should be our final answer. When we make machinery account, and last year how much balance we must get? 48,000. Did everyone of you understand this? So, what two things are asked in this question? First, we are asked to make machinery account. Then second is depreciation. I'll make the format of machinery account. Now, journal is not asked. So, how will we make the ledger? Shortcut. What shortcut? PP, purchase and profit. Debit side, everything else. Credit side. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Ayushi, how will we start? From the workings, we have to directly make the ledger. PP, purchase profit will come on debit side, everything else on credit side.
To balance for down, that is 60,000.
Yes, be attentive everyone. First we do the posting for this. 1412. Book value means balance. So 2 balance brought down. Debit side 60,000. Did you understand this? This side?
31,313 by depreciation 4,000.
Yes, after that 31,313 we have to record depreciation. Depreciation will come on credit side. 31,313 by depreciation account 4,000. Is everyone clear with this?
Yes, sir.
Then what next?
Balancing.
Balancing. How will we do?
60,000 minus 4,000.
Yes, 60,000 will come on both the sides. 60,000 minus 4,000, 56,000. Further?
And balance carried down.
Date?
Date 31,313.
Correct. So now 31,313 end of the year by balance carried down. And Ruturaj, what next?
Debit side 1413, 2 balance brought down.
Yes, this will be brought forward on the opposite side. 1413, 2 balance brought down 56,000. This should match with the book value. See on 1413, what is the book value? 56,000 means up till here we have done. Any doubt in this?
No.
Raise your hand who is still doing up till here. Purchase means how will you pay 12,000? 12,000 you will pay by check. So what will you write? To bank account. Okay, so now 1114 now purchase. Purchase will come on debit side. PP, purchase and profit will come on debit side. But there is no expense. So entire 12,000 you would have paid by check. Debit side 1114. 2 bank account 12,000. Did everyone understand this? Then Arushi,
31,314 by depreciation 4150.
correct. Sit down. Now depreciation will come on credit side, but we'll record the total amount. So credit side 31,314 by depreciation account, and total depreciation means 4,000 of machine 1 plus 150 of machine 2, so 4150. Is everyone clear with this? Digvijay, what next? After 31st March depreciation, you always do balance. Yes?
68,000.
Debit side 68,000. Correct, so now 68,000 minus 450, 63850, 31,314 by balance carried down. Did you all understand this? Ria? 1,414 debit side, 2 balance brought down, and amount is 63850. Did everyone understand this? It should match with the book value. Now see here, what is the book value on 1,440? 52,000 and 11,850. All of you do it. 52,000 plus 11,850. What do you get? 63850. Does it match with the balance or not? So up till here everything is correct. Is everyone clear with this? Now further if we proceed with the workings, then Khushi. Correct. Now 31, 12, 14 again there is depreciation. So that again we will write on credit side by depreciation account 450. Date is 31, 12, 14 by depreciation account 450. Did everyone understand this? Then Dinky, next. Correct. So now, out of loss and selling price, which one should we write first? We should always write selling price first. So selling, purchase and profit debit side, sale will come on credit side. So on credit side, 31, 12, 14, same date. Like for purchase we write to bank account. For sale also we will write by bank account 10260. Did everyone understand this? Then Soil.
131, 12, 14 by profit and loss account 1,140.
Correct. After the selling price, now we'll record the loss. Purchase and profit debit side. Profit debit side, loss credit side. So even loss will come on credit side 31, 12, 14 by profit and loss account in bracket loss 1140. Did you understand this portion? Everyone, any doubt in this? Then Atifa, what next?
By depreciation account 4,000.
Correct. 31,315 again depreciation will come on credit side. So 31,315 again depreciation on credit side by depreciation account 4,000. Okay, and then finally again we'll do the balancing, and our answer should match with 48,000. So 63850. Now do it everyone. 63850 minus 450 minus 10,260 minus 1140 and minus 4,000. Do you get 48,000? Means our answer is right. Provided your workings are right. 31,315 by balance carried down. Opposite side 1,415 to balance brought down. 48,000. Is every one of you clear with this? Now what else is asked in the question? Depreciation account. Make the format for depreciation account. 3 lines per year, 3 years, so 9 lines are sufficient. Yes, I am starting now, year ender. Now depreciation account, I did not give you any shortcut because I told you the account itself is very short. So no need to remember any shortcut. What was the short thing you remember? To machinery by PM. You keep on repeating. To machinery to machinery. You keep on repeating that. Okay. So see here is the workings. 31,313. What is the depreciation? 4,000. So first 31,313 to machinery 4,000. Credit side 31,313 by profit and loss account 4,000. Squared up account. First year is done. Okay, you just have to keep on repeating this. To machinery by PM. Is everyone clear with this? Now see again 31,314. For depreciation 4,150. 4,000 plus 150. So debit side 31,314 to machinery 4,150 and credit side 31,314 by profit and loss account 4,150 and again squared up account. Basically it is closed and transferred to P&L account, so no balance will be there. Able to understand this, everyone? Same way in the third year, but third year there are 2 entries of depreciation. See everyone? Who are still writing up till here? Now in third year there are 2 entries of depreciation. First it is on 31,12,14, 450. Then again it is on 31,315, 4,000. So debit side 2 entries will come. But transfer to P&L will be done total amount when we make final accounts on 31,315 on. So first of all debit side 2 entries will come. On 31,12,14 to machinery 450. Okay, on 31,12,14 to machinery account 450 and again 31,315 to machinery account 4,000. Okay, again on 31,315 to machinery account 4,000. Any confusion with this? 2 entries on the debit side? And total amount 4,450 will be transferred to P&L account on 31,315 by profit and loss account 4,450. Okay, 450 plus 4,000 total amount will be transferred to profit and loss account. Both the sides 4,450. So everyone is clear how to make this depreciation account? Any confusion in this?
No, sir.
Now, question 6 is very lengthy on straight line method. So it's better we start with reducing balance methods question. So we'll take up with question 7. It's a small and simple one to understand. But everything is asked. So let's do that. Question number 7. Okay, 6 is again like 2 machines, very long question, so that we'll do tomorrow. Look at question number 7. Sharma Limited, page number 67, question 7, all of you have taken out. Sharma Limited has purchased a machine for rupees 67,000. Just 1 minute. Anything remaining in question 5 or everything is done? Okay. Question 7. Sharma Limited has purchased a machine of 67,000 on 1/4/12. Installation expense of this machine was 3,000. Depreciation is to be provided at 10% every year. Underline under reducing balance method. You know the basic difference in the two? In straight line method, you count depreciation every year on cost price. Like you can see every year 4,000 on cost price, which was 80,000. 80,000 is 5%. Okay. Whereas in reducing balance method, it will count it on book value. Now ascertain the amount of depreciation, pass journal entries, and prepare machine account and depreciation account aligned for the first 3 years. Show accounting effects in annual accounts for the first 2 years. Everything is asked, but there is no sale transaction and only machine 1 is there. So let us do it fast. First we'll make the workings and then we'll do all what is asked. First we do the workings, be attended. Only 1 machine, so columns are not needed. Head down. 1,412 purchase. All of you will speed up because the question is very lengthy. 1,412 purchase 67,000 plus expenses 3,000. So 70,000 is the cost. Now simply depreciation is to be provided, no other transaction is there. So question is not to be read now. 3 years we have to do it. 1,412 will end on 31,330 minus depreciation. In the question, the rate of depreciation, all of you can see 10%.
Yes.
So 70,000 10%, 7,000. 70 minus 7, 63,000 will be the book value on 1,413. This year will end on 31,314 minus depreciation, but now it is reducing balance method. So 63,000 into 10%, 6,300. Had it been straight line method, then what we would have done? 7,000 itself. Okay? If it was straight line method, then again we would have subtracted 7,000, same amount every year. But reducing balance method, so 63,000 into 10%, 6,300. Raise your hand who did not understand this. So 56,700 will be the book value on 1,414. 2 years are done, 1 more year. 31,315 minus depreciation now. 56,700 into 10%, 5,670. 5,1030 will be the book value on 1,415. Did you understand this single machine? But now instead of straight line method, reducing balance method. First journal entry, first year you'll have 3 entries, and then 2 and 2, total 7. Journal entries in the books of 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Now be attentive. On 1/4/2012 for purchase, machinery account debit 70,000 to bank account, 67,000 to cash account, 3,000. Write down 1/4/12. Machinery account debit 70,000 to bank account 67,000 to cash account 3,000. Being machinery purchased and paid installation expenses. Okay, now on 31/3/13 for depreciation we'll have to pass 2 entries. So 31/3/13 depreciation account debit to machinery account 7,000 Did you all understand this? B. Depreciation provided at the rate of 10% by RBN, reducing balance method, okay, by RBN. And then this will be transferred to profit and loss account. So, profit and loss account debit to depreciation account $7,000. Did everyone understand this? B. Depreciation account transferred to profit and loss account. Any doubt in this? Now second year, simply two entries of depreciation with 6,300. So 14. Depreciation account debit to machinery account 6,300. Depreciation provided at the rate of 10% by RBN. Okay. And then 31,314 again. Profit and loss account debit to depreciation account 6,300. Depreciation account transferred to profit and loss account. All are clear with this? And again last year we will pass same two entries with what amount? 5670 and date 31/3/15. So 31/3/15 depreciation account debit to machinery account 5670. Depreciation provided at the rate of 10% by RBN. Profit and loss account debit to depreciation account 5670, being depreciation account transferred to profit and loss account. So 70 and 14, 84, 7940. Now you are asked to make machinery account and depreciation account. First let us make machinery account. Ledger of Sharma Limited. I told you that when we made the journal, then we'll do the ledger account from journal only. If journal is not made, then you can do it workings, from the workings following the shortcut. Yes, 30 seconds, make the format fast. Now be addendum. Very first entry on 1/4 machinery account debit, so we'll write on debit side both the opposite accounts to bank account 67,000 and to cash account 3,000. Is everyone clear with this? Then from second entry to machinery, so in machinery on credit side 31,313 opposite account by depreciation account 7,000, and third entry will have
No effect.
no effect. Okay, third entry will have no effect. So 1 year is over, we'll do the balancing. 67 and 3, 70,000. 70 minus 7, 63,000. 31,313 by balance carried down. Opposite side 1,413. To balance brought down. 63,000. Did everyone understand this? Yes, further. Second year be attentive again. To machinery, so credit side 31,314 by depreciation account, opposite account 6,300. Again this P&L to depreciation will have no effect, so we'll do the balancing. 63,000 minus 6,300, so 56,700. 31,314 by balance carried down, and 1,414 to balance brought down. Is everyone able to understand this? And again for the last year, 31,315 to machinery, so machinery on credit side 31,315 by depreciation account. Okay, opposite account amount is 5670. Last entry P&L to depreciation will have no effect. 56,700 minus 5670,51030. 31,315 by balance carried down. 1,415 to balance brought down. 51030. Anyone who is having any doubt or not clear with this, raise your hand. We have done it in the very first lecture, but we did it by straight line method. Now we are doing the same by reducing. Accounting remains same, only workings was differently done. Okay. Now make depreciation accounts format 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Now we are in the from second entry 31,313 depreciation account debit, so debit side, opposite account to machinery account, amount is 7,000. And from third entry to depreciation means depreciation on credit side 31,313, opposite account by profit and loss account 7,000. Squared up account. Again next year 31,314 depreciation account debit side to machinery account. Now the amount is 6,300, and from fifth entry credit side 31,314 to depreciation, so credit side, opposite account by profit and loss account 6,300. Okay, again squared up account. And last year depreciation account debit, so debit side 31,315 to machinery account 5,670, and from last entry to depreciation, so credit side 31,315 by profit and loss account 5,670. Again it is a squared up account. Is everyone clear with this? And lastly, what is asked? Effects in final accounts, but for 2 years. I'll explain it and you can continue writing it. 2 years means period ended. First year ending 31/3/13 and second year ending 31/3/14. So profit and loss account for the year ending 31/3/13 and balance sheet as on 31/3/13. Then again profit and loss account for the year ending 31/3/14 and lastly balance sheet as on 31/3/14. Yes, be attentive, I'll explain it and you can continue writing it. Be attentive everyone. For the first year 31/3/13 the depreciation is 7,000.
Yes.
So in profit and loss account 2, depreciation account 7,000. All of you be attentive. And asset side, we will show this portion in the first year. What will show on the asset side is machinery of 70,000 minus depreciation of 7,000, outer column 63,000. And in second year, in profit and loss account, you will show depreciation of 6,300. 2. Depreciation account 6,300. And asset side will show this in the second year. That you have machinery of 63,000 minus depreciation of 6,300. So outer column 56,700. Did everyone understand this? Completed? Your homeworks. Illustration 2, which is only workings of RBL. Then illustration 3, which is similar to the one we did right now. Illustration 6, which is only workings what we did, working note 1, what we did in previous question 5. Calculation of depreciation and cost. Only that much is asked. So illustration 6. Shut up. Don't speak in between. I know what is to be done and what not to be done. Illustration 12, which is similar to the long question what we did in the class today, 2 machines.